So breaking news, the Fed cuts rates for the first time in about a year. Is that going to help your wallet or hurt your wallet? Let's find out in today's video.
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting to spend it and be broke again.
What's going on, guys? It's your bro Taylor.
And your bro Ryan here.
And like Ryan said, big news, the Fed has cut rates. So they actually cut it by 25 basis points or 0.25%. And this was the first cut this year. And people are projecting that there's possibly going to be 2 more coming. So in this video, we're going to go over who's a winner, who's a loser. Because when rates go down, borrowing gets cheaper, but savings oftentimes get worse returns.
So let's think about it this way. Today, you have a car loan that's about $500 a month with a cheaper interest rate. Say it's only $485 a month. No big deal, like 15 bucks, whatever.
Yeah.
But over the life of a 5-year loan, that's $900 in savings. That's pretty incredible, even though it's only 0.25 points. Now, if they cut it 2 more times this year, we're talking 0.75 points from what you were looking at just a few months ago. So you can see how that adds up really quick. So let's jump into some of our big winners. As you can tell from the example, car buyers. That one's pretty obvious. You get a little bit cheaper rate on your loan, so then your monthly payments are going to be less, and you're going to save interest over the life of the loan.
So yeah, if you're looking to buy a car, now might be the time. But that also carries us right into the next winner, which is home buyers. Like we said at the beginning, borrowing money is just a little bit cheaper right now. Right. And while the Fed rate cut doesn't directly apply to mortgages, there oftentimes is some correlation. They follow each other loosely, so a lot of people are hoping that mortgage rates are going to drop and that it's going to be obviously easier to buy a home, because a small percentage change in a mortgage payment is tons of savings. Over the life of the loan, insane.
So yeah, we would put a little asterisk by this one as a winner because just like Taylor said, it doesn't directly affect. So just because the Fed lowered rates doesn't mean mortgage rates are going to drop. They did for a little bit, but they're kind of trickling back up. So it can go either way. It's, again, not directly tied, but that's more in the weeds than this video is about. So we'll just say it that way. A little asterisk by it can be beneficial. And then another big winner we have is people with credit card debt or people that use credit cards often and pay interest. A lot of times you can see credit cards drop that interest rate just a little bit, hopefully, because, again, it's easier to borrow money or it's cheaper to borrow money. And also, I'll go back for a quick second to the housing just to say not only is it cheaper to borrow money for a mortgage sometimes in this case, but also you can apply to get a bigger house in that case. Not that we're recommending you go to your max, but because it's cheaper, you can qualify for a bigger mortgage payment, aka a bigger house. So maybe people were on the fringe of they couldn't find anything in their area, now they can.
Yeah, because I mean, if you've been a part of that process, your lender's like, oh, you're gonna have to buy down the rate. This essentially is buying the rate down for you in a sense. So obviously things just become cheaper. And you're probably gonna pick up on a bit of a trend here, but also in the sense of borrowing money, loan terms are oftentimes more favorable. So let's say you're a small business owner or anything, now might be a time where you start, okay, maybe I should do a little expansion. Obviously, you got to run your own numbers. We're not saying that, take out that $500,000 loan for the expansion, but it is something you should definitely look into.
So for the most part, as you can see, quickly summing up winners, it's people that are borrowing money. Now transitioning to our losers, first one on the list is savers. Sadly, you do get hit a little bit when they cut rates because that directly affects your money market accounts, your savings account, your high yield savings account. That rate's going to come down just a little bit because obviously they need to make money, and if they're giving you more than they're getting and loaning it out at, then they're losing money. So I get it, but at the same time, it does kind of suck because you're like, hey, you want to save money, but it kind of hurts you, makes it a little bit harder.
Yeah. All right, and running right into the next one kind of coincides with that are retirees. A lot of people that are relying on those savings or that interest payments or anything like that. The bond rate also drops. Some of you may not even know what a bond is because you're not 65.
Yeah, like Taylor said, this affects the elderly a little bit more just because they're actually looking to tap into those returns. And if it's returning less each year or as the Fed drops rates, then that could hurt them a little bit at least. But on the flip side, looking at younger people and people trying to rent in general, it could potentially, again, we'll put an asterisk by this one, because it could potentially affect you. With interest rates dropping lower, more people might be qualifying or going to apply for a home, which then might push home prices up, which then in turn a lot of time pushes rents up because if you can't get a home, you gotta rent, so the demand is higher.
Yeah, just the natural laws of competition. Unfortunately, it could indirectly affect you in that sense. Right. So again, another little asterisk one that we put in. All right, and the last one we wanted to include is a bit of a complicated one, a bit winner turned loser, a bit win or lose.
Mixed use.
Yeah, it's kind of hard because if you're already a home owner, let's say home prices rise, all this increased competition, great for the market and everything, but subsequently your property taxes might rise. And while your home value may have gone up and the interest rates may have gone down a little bit, it might not be worth a refinance because refinancing does cost money. If the rate cut wasn't enough to justify it, pros, cons right there. So you're kind of in this weird, tough situation that honestly it's going to come down to your specific situation.
Especially if you still have a pretty low interest rate on your mortgage, that's going to be even harder reason to refinance and waste the money. Or if you're right at the same interest rate, it hasn't dropped enough for you.
Yeah.
The ones that are going to be winning are the ones that got it at like 7.25, 7.75, something like that, because it's around 6.25, 6.5 without buying points. So that could be beneficial. You just have to run the numbers, talk to a loan expert, talk to the experts in the field. Don't just trust random people on YouTube, and just make sure it works for you and it fits in your budget. We'll see. They're a mixed use. But how can we avoid this, or how can we get ahead? First is going to be with your savings accounts. Make sure to shop around. That's the easiest way. Everything's pretty much online nowadays. You can look up all online banks. You can look up the big banks, whatever you want, and just check their high yield savings accounts, check their money markets, whatever you use, check their CD rates, and just see if it works best or it's a good idea to transfer. Other than that, maybe you do stay where you are and just keep it stable. Hope it doesn't drop too much more. Not much else you can do right there other than just shop around.
All right, and another action step you may want to look into is kind of one we've touched on for a few of these different categories is just looking into whether or not refinancing works for you. It doesn't matter what kind of loan it is or what kind of line of credit you have. Just look at what your options are. Does it work out? Talk to an expert like we said. If the numbers work, then, maybe put a little effort into actually making that switch and refinancing.
And a bonus winner and an action step mixed into one could be people with student loans. If you have student loans and your rate is really high or they're private, you can maybe get a much better rate right now, and you could just shop around again. Maybe rates are dropping in that area and you can get or there's a promotion and I don't know. I haven't shopped around with student loans to be honest, but you might get lucky. So I would definitely shop around. That could be a winner because it's cheaper to borrow money. Again, as you can see the trend.
Now, of course, like a lot of things we mentioned on our channel, don't adjust your lifestyle based on what's happening out in the world. But if you're already considering making one of these decisions, this might just be another factor that you want to consider. Obviously, everyone's circumstances are completely different. Take all of them into effect. Talk to the experts like we said. But honestly, if more rate cuts are coming, like they say in the future, a lot of these trends that we're talking about are only further going to be exacerbated. Winners become bigger winners. Losers sometimes become bigger losers. So...
And obviously, as you can tell, winners and losers are just a fun term we're throwing around right now because car loan is a winner in a way because it's cheaper to borrow money. But if you don't need to get a loan, you're still a winner. You can pay cash, get the car. Like, again, this is just a fun way we're looking at it from a different lens. But if you can pay cash, especially that used car, it's obviously a better situation in most times. But I hope you guys got something out of this video. Let us know if there's a winner we missed or a loser we missed. So stay tuned for our next video, like this video, and we'll see you guys in the next one.
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting, you'll spend it and be broke again.